All right, so I think we are live now. Let me turn on my light so everyone can see me. All right, so thank you everyone for joining the inaugural Investing Sucks live stream. I'm joined here with Fabio from Capital Mindset. So he's a man that I'm sure many of you guys are familiar with because I think a lot of people who discovered my channel are either one, came from Strongman Personal Finance's channel, or two, are Canadian. I don't think those two people intersect very much. But Fabio, welcome, and why don't you introduce yourself?
Well, I'm Fabio from Capital Mindset. You guys, again, some of your subscribers may be, linked subscribers to my channel as well. So they probably are going to enjoy the two of us talking. And I guess, should I begin with like a little bit about the channel, how it started? So
Yeah, sure.
basically, how it all kind of started is I was working in a boutique firm. Well, it's a firm that actually does a bunch of property management, property maintenance, and the like. And then they have a portfolio arm of the business where they invest the excess capital, and that's what the owners wanted to do. And I kind of met the owners through another thing I was doing, which was essentially tutoring. Uh, and after they gave me a really good opportunity, I learned a lot with them. And actually, I'm having sort of a midst of a career change at the moment, which I can speak about a little bit because it's going to limit me a little bit in what I can talk about. Um, but no, for the most part, I had a co-host, Austin, and he was very big in watching YouTube finance, and he would come to me with some of these interesting bullish takes on different stocks, and he was just getting into investing, and I thought, hey, that's interesting. That's not really correct, or did you think about it like this? And then I started to see, okay, well, there's kind of like a growing problem on this platform, YouTube, because it's involved with personal finance, and there's a lot of, I guess, money to be made off of people, I guess. And so, I guess we can get into specific channels that actually drew
Mhm.
more direct inspiration, but for the most part, Capital Mindset was started, and I think from I saw your content as well, very similar motivations as to try to provide different looks on investing, stuff like that.
Yeah, so yeah, for me, like the channel I started the channel for a very similar reason. Like, if you look at my very first video, like when I was basically using like a really horrible mic with my laptop, and I
Yeah.
was like super nervous because I was like talking on YouTube for the first time. I was kind of like, well, it's when the whole GameStop thing was happening, and it was right after like the peak when GameStop was at like 300 a share, and it was kind of coming down. So if you look at the first video, it's actually just a live feed of GameStop stock price, and then me talking about what my goal on the channel is going to be. And the whole point was, I'll go back to this video a few years later, and we'll see that the when GameStop inevitably crashes, and we can all laugh about how funny that was. And it's kind of happened, GameStop's come down a lot. But I also wanted to ask you, like, you cover a lot of you do, like, subscriber requests on your channel,
Yeah.
right? So, do you? Because a lot of people comment on my channel, they'll be like, "Hey, can you take a look at this company and this company?" And I would love to, cover every company that people want, but there's only so many hours a day, and, I work full time, I wanna have a social life as well, so I can't dedicate, like, everything to just, YouTube. So how do you kind of balance that? Because it must be difficult, like, as your channel grows when you get all those requests, right?
Yeah, I'll tell you this straight up. I'm actually still trying to find that balance. So right now the rule is on Saturdays and Sunday mornings I don't work. I try not to do anything. This right here, this is coffee from sleep deprivation. And no, because yes, I also work full time at the moment, and actually, I think my next employer is going to be actually quite a bit more brutal on me, if I'm being honest. So I'm gonna have to see how that can balance out. So the answer is kind of two step. One, right now it isn't that much of a balance, and two, I'm still gonna have to figure out just as much as you, I guess. Starting, I guess, July ish. But I kind of already do look at stocks pretty much almost daily. Of course, I have focus points. So some requests, I just kind of put it in there, and I have basically I programmed a model that basically helps
Yeah,
me
yeah.
look at stocks very quickly. Um, and it uses an API, a custom API that brings in the data that I need, and then I kind of just sort it out and evaluate it. So I can more or less accommodate, I would call it basic. Some people might think it's not basic, but basic analysis of a company. And then I can X out a company, whether or not I'm not really interested in it or not. So I usually, I can take subscriber requests. Sometimes I tried my goal. I've been trying the goal of 1 a day. And then I would do a supplemental video of, saying, okay, this is something I'm actually I'm interested in. And this is something you guys requested and I'm covering it. But sometimes, I don't comply with the 1 a day, especially when things get busy at work. And then I might have a hiatus. I think it's when the whole Russia thing, where I was working a lot of hours that day, and I didn't post a video. I couldn't film. I literally had no time. I stopped working, I think that day at like 2 a.m, something crazy like that. But
Wow.
yeah.
Yeah, because I mean, my hours at work. So, like, for those who don't know, because I don't think I've ever talked about this on my channel, I'm actually an accountant. So, I don't even work in the finance industry. This is really just kind of a passion project I took on. And I'm not a CPA. I'm a bit too young for that. Like, I'm only 24 years old. So, I did get all the educational requirements. So, I should be a CPA in a few years, hopefully. But like you said, I tried doing the one video a day thing and I just could not do it. Like, just like, getting on camera every day. I don't know if it's just me personally, but I think I did like 3 days, like really early in the channel, and I just caved in. I was like, I can't really do this. And then even before I was trying to go like once every 4 or 5 days, which I was able to stick to for a little bit. But I mean, it just took like it takes so long, especially because with my videos, like you kind of do your videos off the cuff, right? Like you just kind of pull some stuff up and film it in one take.
Yeah, more or less, because a lot of companies I've already, funnily enough, a lot of the requests I've already taken a look at in the past, and I'll just draw upon previous research, things I know about the business, things I know about the sector, kind of compile it together. And usually, I think that uh, in some instances, I can give a different kind of experience if I do it raw on the cuff, because then it's like it makes me think live, right, with the audience. So I go, oh, I don't know the answer to that. Maybe I have to go investigate it. I look at something interesting, maybe with their leverage, and I'm like, oh, well, what's going on? What's causing that? What's causing the cash flows to be negative? Um, and then, more often than not, it's not so obscure. So then there's not that investigation needed. But a lot of times, again, more often than not the case, but sometimes yes. So
Yeah.
yeah, but that's interesting. So you do an accounting background. What are you working in now? Audit,
Well,
tax?
a lot of people my age, they do like Big Four accounting. So, which is for those who don't know, like anyone who does accounting will know what that is, but it's
Yeah.
basically like the Big Four firms, which is like KPMG, PwC, EY, and Deloitte. So I don't work at any of those firms, and that was on purpose because they work you like slaves when you're young, and a few of my friends are doing that now, and I don't think they're enjoying it. So I'm kind of glad of the route I took. I work at one of the big five banks here in Canada. And I'm in the internal audit department. I actually do IT auditing, so I don't even do like anything with financials. So super exciting job, I know. I'm sure everyone is amazed at that. But yeah, IT auditing, it's great. Yeah, we did get a question telling us a bit more about ages and occupations. So I wanted to also ask you, like, because you've obviously been investing for a while now, right? Were you mainly like self-taught, or did you kind of like study it in school and then you did like an internship earlier on and that type of stuff?
So everyone has their moment, I guess. And my moment actually was in high school, and this was a long time ago now. But yeah, I can look back and say that was actually the moment that got me into it. And it was we did this class competition, and it was actually an investment competition. Um, and I didn't know anything about what the heck I was doing. And it was during the time when there was a pandemic. I think it was Ebola or swine. No, it was Ebola. And I had all this. We had I think a game was like 100,000 in fake money. Right, it was on the Market Watch game,
Yeah.
and I invested everything, all of it, into a hazmat suit company. Completely not even knowing. No, it's even funnier than that. I didn't know it was a hazmat suit company. I literally had no idea what I was doing. And then the kid at the time who was actually winning, he was very pretentious, and I think that's why I won. it was because he was so cocky that the universe was like, all right, now because of that, this guy's going to win instead. And I remember the thing went up like 400 or 500% in like a day. And I kid you not, it was a trash company when you just looked at it. It was simply because of this hype that happened in that moment, and I did not buy it for the thesis like, oh, and I wish now, that was real money. It was completely fake money, all that. And then I said, okay, well, that was just blind luck, and it was fun to win. I felt good. I was like, okay, well, what is this stuff? What is the market? So then I began to investigate. We had a course in my school, and then it basically gave you the foundations for it, very basic stuff that you would teach a high schooler. And then when I went to university, I studied both finance and accounting. And I did some other things when I was also tutoring my peers, stuff like that. And actually, I figured that teaching was perhaps the best way to learn in that aspect. So when I was doing my classes, as soon as I did the class and I had a good grade in that class, I would go back and I'd tutor my peers, right? And people would hire me for that. And then I would never forget some of those topics, but also I'd go back and I'd say, okay, well, I didn't think of it that way before. I would understand things on a different level, and I would tutor in both mathematics. So then that really helped me a lot when I would do calculus. And then business calc was, for me, when I took it, it was kind of a joke because I took all the way up to Calc 3 because a little bit of extra you didn't ask. But I was also a dropout of a biomed major. I dropped out with like 3 classes left because I figured I didn't want to be a doctor anymore. So that's a little bit about that. And then I switched.
So you're like Michael Burry then.
Yeah, but not Michael Burry. Just I guess a dumber version of Michael Burry. Not even, but I wouldn't even say that because that's actually maybe an insult to him because he's proved himself. I haven't proven anything yet as far as like anything near him. I have to predict the next great financial crisis.
Yeah.
But yeah, I guess very far away. Yes. In that sense.
So were you like really good at school then? Because like for me personally, I was honestly like kind of bad at school. I took a lot of like science courses kind of coming up in like high school and everything. But then as soon as I got to university and I was studying business, like my grades just took a complete 180 and I was like doing like, better than all these people that were like previously like destroying me in school. And it was like completely unexpected and not trying to like brag or anything, but it was like mainly finance and accounting courses. And that's kind of how I knew that I wanted this career path because it just always made sense to me, like I would like financial math, I was perfectly fine with, but with like calculus and physics, I was god awful. Like physics was like the worst thing. Like the worst course I ever had. I just could not do it. I was so bad at it. And it's funny you said about the like the practice investing account because I actually had something similar where I had like $1 million portfolio, just, as like a training thing or whatever. And I still check it from time to time. And I made some insane buys in that portfolio. I bought Align Technologies when it was like under 100 a share. I bought Netflix when it was like at like 90 or something. I bought like all like the FANG stocks as well. Like, I mean, I was really just like, I wasn't like researching anything. I was just buying random companies.
Hey, the
Yeah,
monkey method does work sometimes.
yeah, yeah, that's true. I mean, these monkeys are outperforming some of these fund managers. But you talked a bit there about finance versus accounting. There was a bit of like a debate in like the educational field, like that, like some people say that there's no business degree that's really worth getting other than accounting. So would you say you agree with that, or do you think finance is good to study?
I'd say that's the case outside of those two, because the thing is, in accounting, you will learn a lot of things you will learn in finance. I'd say this finance degree is it's good, but it's not as good as an accounting degree. If I'm being objective, it's not as good as an accounting degree. I think the accounting degree helped me a lot more than my finance degree. But the finance degree, it's if you go above and beyond those classes, so you learn what is taught to you in the curriculum, and then you go beyond that. But the grand majority of students won't go beyond that. So I was very good friends with some of my professors. Actually, one of them just unfortunately just passed away. But he was really good and inspirational to me when I was an undergrad. And he actually took me on. So we actually went and kind of did research. We didn't actually publish a paper, unfortunately, because he actually passed away. But we were working on something to study EBITDA, and actually the past metrics of how good has EBITDA been for a valuation metric, right? But those kinds of experiences were really good. And he actually, by the way, that professor was an accountant first, and then he went and taught finance. And he had actually a PhD. I forgot what he had a PhD in. Unfortunately, I forgot what he had a PhD in, but I know he was a doctor. But yeah, no, if I'm being objective, yeah, the accounting degree for the most part is going to give more opportunities. For example, if you wanted to go into investment banking, I know that a path that some people take is Big Four audit, right? They get their accounting degree, they go Big Four audit or big regional audit, and they can go right into investment banking. For example, that's an accounting degree, right? You would think finance degree goes there, but I mean, you can get there, but I know of more direct paths to that, a business line with accounting, actually. So,
Yeah, well, with investment banking, like you can really get into that with any sort
yeah.
of degree. Like you really just
Yes.
have to know your stuff. Like I've heard of people getting into investment banking that have like liberal arts degrees and like
Yes.
they do fine. Like they don't go like you just have to know your stuff and it's largely like self-taught. Like because I did a few because I was in like you call them internships in the US, we call them co-ops here in Canada, but I
Yes.
did a few co-ops here, like all in accounting, but I did interviews for like asset management, none ever in investment banking, like equity analyst roles. And like I never got those jobs because I just couldn't pass the interview process. Like they
Mm.
would always make you do mental math, like, on the spot. And those really like tough questions, like how many pennies do you think could fit into this room type thing. And I just, when people are like watching me and I'm trying to do mental math, I just cannot do it. Like if I tried to do like mental math like on the stream now, I probably wouldn't be able to do it, knowing that like people are so that's one of the reasons why, I guess finance never really worked out for me. But I also kind of feel like it was for the best because I think with accounting, like it just feels more natural to me. Like it makes so much more sense when I'm going through things. And with finance, I've heard some pretty bad horror stories about friends of mine who work in those industries and, just bad things happen.
Yeah, the finance industry, if you're working in those fields, it's very stressful. I'm not sure entirely if that's something I would ever want to do for myself. So yeah, no, kudos to you because I think life is also about balance. It's not only just about making money; it's about it also enjoying it. While some of these roles they do pay very well, what think about also what you're giving up. And I don't know about I know this guy he's in New York, right? And very anecdotal, so everyone dismiss this. It's completely anecdotal. This individual, who I won't name them, but they make about I think they're an analyst. I think they make like 80K, something like that a year, and out of college. This was right out of college, and but it was in New York City, so
Mhm. Yeah.
80K New York City. It's like I don't know how
It's
far
like
that
the
really
poverty
goes.
line in New York
Yeah,
City.
exactly, exactly. So I don't for Canada, you're a very expensive city. Well, that's not our most expensive. Our most expensive city is San Francisco. Yours is Toronto, right?
Well, that's where I live.
That's where you live. Oh God,
It's not too bad, honestly.
not
I
too
mean, it
bad.
really depends where you live in Toronto. Like, I mean,
Mm,
I'm like my living costs are honestly not that high. But I don't have like a car or anything or like so like I don't have to do like, pay for that or like insurance or anything. Vancouver is pretty bad, which is
Vancouver.
yeah, well, it depends like if you're trying to buy a house, then yeah, you basically have to be, you know, like a Canadian oil tycoon or whatever if you want to just buy like a normal sized house because like housing prices here just I'm sure you've heard of that. I don't know if you've heard of
Yeah.
that before. Like the housing price in Canada, they've just gone like absolutely insane. And I think a lot of my viewers, like, they are Canadian, so a lot of them have a lot of, like, built up equity in their homes. Because my average viewing audience is, I think, like, 30s, 40s.
Mhm.
Um, but a lot of, like, young people, like, people like me are, like, pretty frustrated with it, um, because it just feels like every year housing prices go up, like, 30% year over year, and then income's, like, stagnant just as you get out of school, right? So it's a lot of people get really frustrated with that, so
That makes sense.
There's a lot of banks.
Have you ever delved a little bit into the armchair economist realm, as I say, for why that is in Canada?
I've debated doing like an in-depth video on that, like just explaining that on my channel because I think I could make a pretty decent video on it, but I just feel like it's such like it's a topic that like so many people would have different opinions on that I was
Yeah.
just kind of like, eh. I mean, maybe I could, and like I recently covered a company on my channel called Equitable Bank, so they're a company that's very exposed to the Canadian real estate market because they're a bank, but a lot of their lending operations are to um, like people like mortgages, reverse mortgages or whatever. Um, so that was what like I was kind of debating like should I go like very in depth on like Canada's housing market because I think it'd be a good segue from that video. But I don't know, it just seems like if I start doing that video, I'll just get lost in the research of it, and I don't want to spend too much time on one video because then you learn about one thing and it's like, oh, but then you have to learn about immigration policies and you also have to learn about what effect interest rates have, and it can just go into all these different things, and then I'll just get to this point where I'm like, man, this is just like turning into like a huge project that because I want to be like concrete in my videos. That's what I think a lot of my subscribers will know is when I like say something, I want to be sure that what I'm saying is not like just an opinion of mine unless I explicitly say this is my personal opinion. I want it to be like, here are the facts and then just make of these facts as you want type of thing. And I think you kind of do a similar thing on your channel, right?
Yeah, I try my best. So there are some like series. I'm actually finding the same problem. Actually, you're describing it perfectly. I guess I'm just less cautious than you are in that aspect
Yeah.
because you start one type of series explaining something, but as you described it perfectly, a lot of these things they're like multi-layered cakes. You break one layer off, and then you find there's like 5 more layers. So unless you make a video quite literally 10 hours long. And then you think
Yeah.
about how much research goes into a 10-hour long video, you're not going to cover each layer. And even then, by the time you get to that bottom layer that you see, you might uncover, like 20 more layers. So I've posted some videos on some topics and they're usually these macroeconomics topics that exactly is it's just many layers over and over and
Yeah.
over again. And of course you'll get the comments saying, well, you didn't explain this. It's like, well,
Yeah.
come on, I only made an hour-long video.
Yeah.
You can't cover all these things. And I guess you kind of hinted on it that it is a topic that a lot of people have opinions on. And you will get, I guess, if you express any form of opinion, and even then, some things, I guess in economics, it's still some aspects of it are still just theory, and still even there's debate among the experts as to
Yeah.
what is going on under the underlying mechanism. So some people ascribe to, X theory, some people ascribe to Y theory. If you start supporting a little bit too much X theory, the people who support Y theory are going to come on and say, hey, that's false because of this, and this. And then so it's almost like you're going to have to tackle, if you want to be neutral, tackle both at the same time as if they're both real, right? So, for those of you who don't know what I'm referencing, a quick example is, MMT versus basically non-MMT or the other schools of thought, right? There's a lot of MMTers out there. And if you make a video on MMT, you'll get them in the comment section saying, hey,
Yeah.
you didn't comment on this. These are the books you're supposed to read, this, and this, stuff like that. But
Yeah, I recently read The Deficit Myth by Stephanie Kelton, which is kind of like
yes.
the main book on MMT. Because I was just curious. Like I had heard some people, kind of dismiss it, and then heard some people say this is an idea we should embrace. Which do you want to kind of explain what MMT is a bit,
Yeah.
just so everyone's kind of on the same page?
So the common misconception, and I'm going at this from the perspective of an MMTer, so putting on my MMT hat on, and if I say or if I sound like I'm supporting it, don't construe that. I'm just going to be Switzerland here. So MMT is a kind of a observation of how the system works, right? So how it's thought of is that the government is not a household, but people think of the government as the household. And or they think of it just like how you would think of yourself. You can't spend more than you take in. But
Yeah.
MMT is saying, well, it's not so simple. In fact, the government is the quote unquote issuer of this currency, and they typically like to use the example of subway tickets. They use the New York Metro or whatever city you can think of, subway tickets. They can issue these tickets, and then they can tax it and basically cause the demand for these tickets themselves, right? And the tickets replace that with dollars.
Hmm.
And then so what they try to espouse in quick summary is that the debt isn't so much of a problem as some people make it out to be, because at the end of the day, we owe the US dollar, right? And so the US dollar, I'm talking about United States, but the US dollar is, the currency of the United States, and the United States borrows in its own currency. And so it kind of goes further than that and says that countries that can't borrow in their own currency are the ones that really have the problem. So I guess from there, you can start unpacking. You get a lot of questions such as, what are the assumptions being made? Because every theory has core assumptions. And if those core assumptions are not solid, then, therefore we could see a problem with the rest of the theory. But that's where I guess people attack it.
Yeah, I mean, there's definitely, I guess, a lot of the Bitcoin people are not open to the idea of MMT, and they like the whole Austrian economics ideas, which that's not something I've delved into a lot. And when I was reading that book, like there were some ideas where I was kind of like, okay, yeah, I guess this makes sense. They're talking about like the public debt isn't necessarily something that needs to be paid back. It's more of just like an accounting record of past deficits. Um, but then there
Yeah.
was just some explanations in the book where I was just kind of like, this doesn't like really make sense to me. And going back to what we were saying before, like if I was to try and make a video on this, like there's just
Yeah.
so many different directions that it could go into. And like you said, you did a video on it before. It was probably like an hour-long video, I'd assume.
I think I did an hour-long video, and I tried to cover the different viewpoints. I covered the inflationist viewpoint, the deflationist viewpoint, and briefly the MMT viewpoint. Then I made a subsequent
Okay.
video covering that a little bit. But because I don't know if you're familiar with, for example, Dr. Lacey Hunt by chance. He's really good. I actually think, you see, here's my bias here. I think he's probably one of the more accurate explainers of how the U.S. Economic system works, or even Jeff Snyder. Jeff Snyder's really good too.
Mhm.
But I don't like. For example, do you want to talk more about MMT and some?
Yeah, we
You
can
want to
go
go
into
down
it.
the
I mean, we
rabbit
don't
hole?
have to I mean, we got time here. We don't have to make a whole thing on MMT, but you can finish your point.
So, yeah, no, MMT, I think some of the key assumptions that MMT makes, for example, is the power of the dollar, right? I'm not saying that the dollar is going to lose power or anything like that, or the euro itself, but a big part of the MMT theory is that the United States can and will continue to be able to just borrow infinitely under its own currency. And then that's it. So I think if we can debate MMT, we would have to debate that point. And then that's the main point. If that point is defeated, the rest of the theory then collapses. But otherwise, if the dollars, if we knew for 100% fact that in the next 1,000 years, 100,000 years, whatever time period you want, that the dollar will maintain world reserve currency status, the theory doesn't seem so outlandish, right? So
But that's
that's
never happened in history. Like one
exactly.
reserve currency like maintaining its status that long. Like I think well, I another book I just finished reading
Yeah.
was the one Ray Dalio just released, The Changing World Order, which I
Mm,
thought it was really good. Like I
yes.
definitely recommend anyone read that. And he basically goes in depth on like the past, empires that have taken place. So you'd have the Dutch Empire, which was then overtaken by the British Empire, which was then overtaken by the current American Empire. And then he kind of makes the case that the American Empire is kind of on the decline, while the Chinese Empire is going to be the next superpower. And currently, the reserve currency is the US dollar. Like, no one
Yeah.
really would dispute that. And the reserve currency status of a country, he said, tends to be the last thing that kind of falls in a country's like empire status. Like the first thing that would happen is their education increases, because then their education leads to more innovation, which leads to higher productivity, which leads to higher income. So then that's kind of how the up part goes. And then those things, there's a whole bunch of things like wars happen, and then things start to fall down, and the last thing to go is the reserve currency status. But I mean, MMT is kind of based on the theory that, like, if you're talking about from a US perspective, that the US dollar will always be the
Yep.
reserve currency, which history says that probably won't happen.
Yes, exactly. And that's what I tell people all the time. It's like if you're going to debate against MMT, you got to go to the core. So you got to attack the axiomatic beliefs of the theory,
Yeah.
the core beliefs. So yeah, absolutely. Ray Dalio's point. I think I saw, for example, he's also posting that same book, I think, in video format or like a
Yeah.
video essay. And yeah, he does talk about exactly that because the pound didn't lose its full power, I think, until what was it, the 70s or 80s? It was the last thing to go, like fully.
Yeah.
And then the dollar exerted, its more complete dominance. And then we had, well, right now, if you look at Jeff Snyder, for example, he goes extensively into the euro dollar system. And I see his points. For example, he kind of expresses how it's a living, breathing, organic machine. And you take the Snyder pill, you're going to start to, which I don't say it in a bad way, by the way. But you start to then go down the rabbit hole of, does the Federal Reserve even have power? Okay. Which
Oh, man.
really, yeah, no, like, I'm not kidding. There's like 100 layers down there. So
Yeah,
we'll leave that to the side.
once you take that pill, there's no going back.
Yeah. But like not in a bad way. It's just that it
Yeah.
is very, very unique perspective. And he actually could be right, by the way. But I'll reserve that for just my opinions because again, I don't know who's right.
Yeah.
So
All right. So here's a question for you, Fabio. Now, I'm not too much of an expert on oil. I have talked with a few oil companies, but it's not a topic I've looked into that much. And to be honest, I find it just really confusing and overwhelming because it seems like oil seems to be more influenced by international relations and politics and that rather than just classically supply and demand. Well, like, politics is what influences the supply and demand. But yeah, do you want to give your thoughts on this one?
well, you covered just now the summary of it, exactly that. So oil being a commodity, all these businesses are entirely reliant on commodities, and commodities, from basic economics, you can learn that commodities, it's a lot of the supply and demand dynamics more than anything. There isn't really differentiation. So if you have oil over there and I have oil over here, it's more or less the same oil. Now I know the details on that specifics are not entirely correct. For example, Venezuelan oil is very expensive to extract versus Saudi oil is very cheap to extract. So yes, technically the oil is not the same, but for the most part, after it's refined and perfected, blah blah blah, more or less the consumer won't really care which oil is which. They're going to be like, all right, I'll fill my car with that. So with oil, I cannot predict what the world's going to do.
Yeah.
So that's why, for example, when I made the video saying, okay, I'm starting to sell out of my ConocoPhillips, I'm de-risking the portfolio from oil from that company's perspective. And now we just reached new highs. It's because of all this shenanigans. The reason why I didn't sell in all of the position I kind of expresses is because I don't know. I don't like to jump out all the way in or jump out all the way out. I said that the wrong way, but you guys get the picture. I don't like to
Yeah,
make
yeah.
sudden immediate moves. So with ConocoPhillips, I'm kind of easing out, and it's exactly for these reasons. So oil, I guess, depends entirely on this conflict, whether it's resolved quicker rather than later, stability or not stability. I do say that I am watching to make sure, because if the oil, for example, in Russia is kind of threatened in some capacity, if they were to shut down the oil production, that would actually have big lasting ramifications longer term for oil prices, because people think that you can just turn on a valve and just oil just comes out. As soon as you turn it off, it takes a long time to ramp up again.
Yeah.
So that could actually have long lasting ramifications. That's, I think, why the West is avoiding that. They're trying to avoid that because
Yeah.
that would be bad. That would be a bad thing. So
Yeah, you can't just order more oil on Amazon with next day delivery. It does take a while. It's crazy. So I got a comment on my channel about 3 or 4 months ago. It was a video I did on Suncor, which to this day is still the most viewed video on my channel, which to me was kind of surprising because I didn't think it was that great of a video. I mean, maybe it's just a lot of people search for Suncor, but someone commented on that, and this was like 3 months ago, I think, 3 or 4 months ago, and their comment was Russia's invasion of Ukraine before March of 2022 will push up oil prices. And then that's exactly what happened. So,
Wow.
I mean, yeah, I commented back and I was like, "Man, you wanna send me that, crystal ball you got?" But yeah, like, I just and, I'm surprised I even, like, found that comment. It just kinda, like, came by me, but, another thing I wanted to ask you about, so you made a lot of videos on this company, Gazprom, right? Which is like a
Oh, yeah.
Russian oil company. So do you wanna kind of explain what your investment strategy was, and, like, it was a pretty risky investment, I'm assuming, 'cause well, I'm assuming you bought it through, like, an ADR or whatever, right? Like, you didn't purchase it directly on the Russian exchange? I don't know if there is a Russian exchange.
No, yeah, there's the Moscow Stock Exchange, and
Okay,
in order
yeah.
to get the shares from there, I won't say it out here on the live stream, but right now it's silly let's just say that. But the I had Gazprom before, and then I sold Wednesday. It was, I think, the day of or the day before the invasion, because the sanctions, there was a lot of unclarity, and I had already been selling some Gazprom just a little bit. It was actually planned on keeping the remaining position, but then I sold the rest of it. I sold it for like $6.20. Made a video on it when I sold, and then you probably saw the video when I bought back.
Yeah,
So that video I bought back, and I think it was the last day before they closed off the ADRs. So I don't think you can buy anymore. I don't quote me on that, but at least the
mm,
brokerage that I tried to buy them from that day, they didn't allow me, even when I called. And the thesis underneath it all is, if you're buying Russian stocks, you're probably betting. You're being an optimist. Let's be clear. You're actually betting on peace. And I also Lukoil is another one, by the way. I just want to mention that one too. But for the most part, you're kind of betting on things getting back to normal, rather than if you think it's going to escalate further and further and further. Okay. If you think things are going to get worse, you definitely don't want to own Russian stocks because of the political environment. Oh, you know what? Yeah, we're all gonna be down at the truck stop, or maybe the gas station, because it's a Gazprom theme. We're down at the
yeah.
gas station trying to sell something to get something. That's all I'll say.
So that was like a pretty high risk investment though. So
Yes.
do you commonly do investments like that? Because me personally, like not like extremely low risk, but I'm fairly low risk, which doesn't really make sense because like I'm pretty young and a lot of people my age are like doing higher risk investing. Like I have a lot of friends that, do options and stuff, which I mean I might do options later on, but currently I don't deal with options or anything. So do you do a lot of investments where it's kind of a situation where it's like, I could like lose everything here, but there is upside that justifies that?
Yeah, I mainly keep that in the speculative side of the portfolio.
Yeah.
So when I categorize the portfolio positions, I have speculative. Some of those I own them for ridiculous reasons. Okay, I'll say one of them, but I'm kind of I think I'll say it. Just no one do this. It's a micro cap. Do not buy it. It's literally probably not a good company. I only like them for their milkshakes. You see, that's the reason. That's the investment thesis. It's my only fun company, for example, and it's BurgerFi. Right. So I like their custard milkshakes, and I frequent them here and there. So yes, you have recourse, by the way, because it's completely legal advice. Um, and yes, I will have hair gel. Wait, I want lawyers to seize his hair gel to pay me back. I don't even use hair gel, strongman. I don't even use. This is just the hair, me pulling my hair because of Gazprom particular. But no, I don't tend to make investments like that. This in this case was quite literally, there was blood on the streets, and I pretty much just bought back the position that I had sold previously.
Yeah.
And then I saw that, in my opinion, there was some. It was an interesting play should things, normalize, or we things not escalate. But I'm also, it's in my portfolio, my public portfolio. I do disclose that in the videos when I discuss it. It doesn't actually disclose, for example, my cash position that I hold for other things that I have going on in my life. So it's
Right.
just showing the public securities. It doesn't show like my real estate or anything like that. Just public securities.
Yeah.
So if you think about it, the position's smaller than it actually is. And as I deploy more cash into the market in different positions, it will actually go down. But I'm not selling it. I can't sell it. Let me be clear.
Right. Yeah.
So we'll see how that goes. Gazprom, my
Yeah.
ass.
Yeah. So you actually like publish your portfolio and show it to everyone, right? And then do
Mhm.
like updates along the way. Now, like a lot of people have asked me, like, why don't I do that? And first of all, by the way, guys, if you think I have like some insane $1 million portfolio with, all these complicated securities and everything, my portfolio is very boring. And full disclosure, I'm like, majority of it is just in index funds, even though I do talk about individual stocks. And I've talked about like some companies that I've bought, like Markle or Markel is one I've bought, Brookfield Asset Management, and then a few others I haven't talked about yet. But do you like when you reveal your portfolio, are you at all worried that like making content around your portfolio is going to influence your decision making?
Uh, yes, yes, I am actually worried about that. Longer term, because, or are you referring to talking about it because I want others to
Well,
invest
it
in it?
could be both
Is
because it could be like you're talking about it because I mean, obviously like no one's like YouTube channels really are big enough to like influence the market, but like say, do you think there's a chance that because this is something I like kind of considered, like if I'm talking about a specific company, there's certain companies that are going to do very well on YouTube, right? Like I could talk about Palantir, right? And that video
Yeah,
would probably get a lot of views. But
yeah.
obviously, like you don't have to buy a company that you're talking about. But if you want to make, more interesting content, you're probably going to find yourself talking about companies that people are interested in hearing about, right, on YouTube. So are you at all worried that your investing decisions are going to kind of be swayed more towards companies that are interesting to talk about versus companies that would actually be good investments?
Well, okay, so I'll phrase it in this way. The If I'm going to make investment decisions based off what I think the popularity of a stock would be, that would be very questionable for the performance longer term of my portfolio. And that would be very, very detrimental to my long term wealth. So for me, I think I want to be as wealthy as possible regarding my investments.
Yeah.
And so I don't think, I mean, of course, like let's say, okay, I get corrupted by the, let's call it the silly bug, right?
Hmm.
And then all of a sudden, I want to invest in Tattooed Chef because the Tattooed Chef videos do really well. They get 1,000 views, 2,000 views, thousands of views, or whatever. And therefore, I'm going to, for some reason, want to put money into that. I doubt that the money generated from the views is going to help me recover the money I'm going to lose, right?
Yeah.
And then if I don't have a solid foundation as to why I invested in it, I know myself for that. I have to have that. Otherwise, I'm going to, like, because I am human. I'm going to be skittish about it, right? So that's my
Hmm.
rule. Also, I don't want to ever get involved into a company unless I am honest with myself. I repeat that lesson a lot in my videos. Honest with oneself is very important. If I'm honest with myself, do I understand this business? Am I investing it for the right reasons? I.e., is it speculative or is it core? Um, and for example, some of my speculative positions have done really well, but that doesn't mean I'm not going to go tomorrow and say I knew it. My speculative position is done really great. I'm a genius, anything like that. It's like no, it's in the speculative. If anything, the public portfolio shows is kind of like an accountability mechanism where
Yeah.
it also displays to the audience, and it's behind no paywall, because I think that's kind of interesting when people do that. But uh, it's kind of just there, and then people can kind of see my performance over time. However, I want to also say I am actually talking with a legal counsel whether or not I'm allowed to actually show some of the things. And I've gotten some requests from the audience members, because even though I say this is not financial advice, don't copy my portfolio, there are some problems that can arise from that. Uh, so, for example, I have this little column now that says, am I accumulating? Am I holding? Am I not accumulating? Or like my sell prices, my buy prices, like when I want to buy this or anything like that. I'm still seeing if that's okay. And I haven't gotten a concrete answer yet. But you didn't ask about that, but I'm just saying that because I know some people might go check that out and say that's temporary. That might not be here. Or if I find out I have a green light, I'm good to go. I'll keep that.
Yeah.
Did I answer your question? Sometimes I go on mental tirades.
No, yeah. You answered at the start, yeah. But yeah,
Okay.
I guess the idea is like because personally I've been kind of like obviously like the portfolio is going to generate more money than like a YouTube channel with 1,000 subscribers, right?
Yeah.
But even just a little bit, like, because humans like to think that we're entirely rational thinkers, right? So if you're thinking
Mhm.
about it from that perspective, you're saying, like, that obviously makes sense. Obviously, I'm going to do that, but you can't like cheat the brain with your brain, right? Like, you can understand things, but even if like just understanding, say your brain's shortcomings isn't going to mean you're not going to be able to be influenced by them, if you get what I'm trying to say,
No, that's a
because
really
it's
good way
it's
of
your
putting it.
brain.
Yeah,
Yeah,
that's true.
so that's one of the reasons why I've kind of been like hesitant to show my portfolio, because I don't want there to be any any outside influence of there being like, you know, I should be like, it doesn't have to even be like a company like Palantir, one of those like sexy companies. It could just be because I talked about this on YouTube and I was very bullish towards it. I now feel the need to be like irrationally bullish towards this company just because I want to look good on YouTube, and I don't want people thinking that, I'm a moron and I don't know what I'm talking about, or, that I just failed to do research properly or anything like that. Because, like, obviously you're going to make mistakes at some point. You're going to overlook something, or you're not going to consider something. Like, these types of things happen. Um, so yeah, that's kind of my reasoning for it. But I do understand like the accountability part. Like, I think that's important. And part of me does feel bad that like I don't share that publicly, because if I am going to be like talking, I also have to show that I can walk the walk, and like, and if I am like, I'm not trying to be on this channel portraying myself as this genius investor who's like, a self-made millionaire and, understands everything. A big reason why I started the channel was to learn from other people as well and understand that, most of the time you're not going to know a lot of stuff, right? And sometimes your job is more so like, instead of learning things, it's more about managing what you don't know. And that's honestly how a lot of my investing goes. It's like, try and figure out what I don't know and then understand how I can mitigate that risk.
So I'll add, you don't have to
Yeah.
feel that necessary pressure, because I think, for example, what YouTube can provide is just differing perspectives. Like, for example, I think where the line you can cross the line is when individuals are charging to see one's portfolio, because I think that already crosses the line of charging for almost financial advice. It's teetering on the line at the very least, but charging people to see your portfolio is like, I think that's where the line is for me.
Yeah.
But if you don't show your portfolio, that doesn't mean, for example, you're wrong or you can't share your opinions, right? Because, for example, a lot of analysts, they talk about stocks that they're not invested in, right? But we listen to their opinions on that said stock, right? So I think it's like kind of akin to that. So YouTube, all these different creators, there's nothing wrong with saying, okay, I've done this analysis on this company, and I think it looks good, right? And then, yeah, you're actually removing yourself and saying, basically removing yourself from ever being a hype beast on a stock
Mm.
by doing that. So I actually see that it actually, you're right, it does mitigate yourself from actually falling into that trap. And then I say this now, and then you actually might be completely right that I get corrupted by the foolish bug eventually. So I have to actually consider that and think about that. I'll say
Yeah.
this: if I ever do so, just email me. Let me know
Yeah.
I've gotten the foolish bug and I need to rethink my life.
Yeah. I'll call you out. I'll call you out as a
Yes.
grifter and a fraud.
Yes. No, exactly. Please do. I
Yeah.
think that, for example, if you create like a community on YouTube that remains accountable, because I think we're all human, so we can be tempted by certain things. For example, I already get, I don't know, you probably got emails too for certain promotions.
NFTs.
I haven't gotten an NFT one. I have
I
not
get one
gotten an
like
NFT.
every week.
I'm very offended. I have not
Yeah.
gotten an NFT, so I
They
can't
keep
say that
going up too.
they keep
They keep
going up.
going up in price. Like, the first one I got was like 700 and now it's up at like 2,500 bucks. Like, man, guys, I might have to sell out at some point here. No,
Maybe you just tell your audience here and now,
yeah.
or
I
you leave
reserve
them a
the right.
message that like,
Yeah.
hey, I'm gonna sell out, but just don't listen to me when I say it.
Yeah.
Just know that they're just paying me money. Something like that. I don't know. Maybe what I mean, they'd probably tell you like in that agreement, like you can't tell them anything like that, which is so you can't trick them like that,
Yeah.
unfortunately. But I say this, all the people, if you're watching Eric's channel and you see the scams, right, that are overtly scams ads, right, what you do is you watch the whole ad, you support Eric, and you click on their link. So you make sure they spend the most amount of ad money. You click on their link, you watch the whole thing. So you're siphoning money from the scam over to Eric. That's a
Yeah.
good way.
Yeah, I still have no idea how this whole like YouTube algorithm, like AdSense revenue stuff works. Because I mean, I just got the ability to monetize like I guess a few months ago now.
Yeah.
And yeah, I mean, part of me like really wants to just like move this whole thing off of YouTube because and move it to something where I can, you know, not have to worry about YouTube and all their content restrictions and all that because like honestly dealing with YouTube is so annoying. Like I hate it so much. But also um I wanted to ask you like do you watch any other content creators like finance YouTube content creators?
Um, well, if I'm being honest, when I have time, sometimes people will send me things that I really wish I didn't watch. Usually, it's friends who they're more active in the again because that's where the inspiration actually kind of came from. They were very active in YouTube finance, and they would send me these videos and stuff like that. So they'll still send me videos now. And now because they know sometimes it tortures me, so they do it for the laughs. But on a more serious note, I have seen more strictly content creators. Strongman's in here, so yeah,
Yeah.
I do watch his. He's very entertaining, extremely entertaining. And then I actually watch your channel. Been watching your channel, like your work. I see. Unfortunately, I think there's some creators that have kind of fell off the deep end that I used to watch. I used to watch the guy who covers macroeconomics. I don't really want to bash his name too much because I actually hope to one day interview him and kind of say like, "What's going on, man?" But Stephen Van Meter, I kind of watched him a little bit, but he covered some topics that I now kind of watch instead. Euro Dollar University, I think they put out some really good content, and that's with Stephen Kolonowski and Jeff Snyder. They do some stuff.
Yeah.
But that's pretty much it, if I'm being honest. Again, aside from the ones that kind of are sent to torture me, which is usually I used to call him the porcupine guy because that's what he reminded me of. Do you know who I'm talking about?
Uh
I'm trying to see if he actually looks like this is a psychological test. If he actually looks like a porcupine, you'll know what I'm talking about, or it's just me and he's not
okay,
like a
no,
porcupine.
I don't know then.
Financial education. To me,
Okay.
he's always looked like a porcupine. And way before I knew really who he was, thought he was called him porcupine guy.
Yeah.
So yeah, sometimes his content sent to me. What do you think about him? I'm actually curious.
Yeah, I haven't really talked about that.
You're like me a
Because
little
when
bit romantic.
yeah, because when I came on, um, like I went on Strongman's live stream the first time. This is when I had like literally like 5 subscribers. Like I had just started and Strongman was like the first person that subscribed to my channel. Like I subscribed to myself and then he was number 2. So he was like the first because I commented on one of his videos like right after I like set up the channel and everything. This was when he was a bit more normal in his content, when he only had like a few hundred subscribers and he wasn't releasing like 2 videos a day from his car. Um, yeah. But yeah, like I mean, I don't really watch them. Like I don't watch like Meat Cat. I honestly didn't even know who he was until like I heard about him from like other people. And then financial education I never heard of. I knew who Graham Stephan was because I mean he's pretty popular. And I don't think anyone really has beef with him. I mean, he seems like pretty normal. But there's, I think, some really good like YouTube content creators. Like I watch Patrick Boyle. So he's I don't know if you've heard of him, but he talks about, economics and stuff. And I watch other guy named Larry Chung. He also talks about economics and stuff. And both these guys in like the grand scheme of YouTube are like pretty small, but there's a lot of like good resources out there of people who know a lot of stuff and they actually want to like teach things. Like they went on
Yes.
YouTube obviously to like make money, but they want to like actually teach people as well. And they worked in the industry, so they know their stuff, and they're not just feeding you BS and trying to siphon your money. They know what they're talking about. They, can educate you. And I think, yeah, like I think there are good content creators, and it's interesting to see like how YouTube has kind of evolved. And like one of the reasons why I started the channel again was because I always believed that YouTube wasn't just an entertainment platform. There were people there, like however big or small the audience, that are interested in like longer form videos that are more boring but like somewhat educational.
Yeah.
Um, and I started talking about like Canadian companies going super in depth, and then I had people following me. So I'm like, okay, maybe there is a bit of an audience for this stuff.
No, absolutely. There is. I think the podcast boom showed that there's just demand for longer form, more in depth content. Like you have shows, Joe Rogan has like 3 hour shows, right?
Yeah.
And look how big his podcast is. Because the media had been kind of segmenting into small little bite sized pieces, and there was just this demand from the audience, from people in general, that they just wanted something to go more into a topic, right? And yeah, that's what I'm noticing too. But absolutely, because I was actually saying this, I said this to Strongman on his live stream a while back, that I think like YouTube, left to its own devices, is kind of on its own forming an ecosystem of a lot of people who are just coming on here, and they actually do want to provide valuable content to the masses, to everyone, and it's free, it's ad supported. And then, for example, I have no problem with someone like yes, who is an industry professional, selling a course like, for 30, 40, even $100
Mhm.
on said topic. So I won't actually go out and say, oh, that's terrible, blah, blah, blah. But if that person is actually, an industry professional, and then you are someone, for example, let's say I want to learn how to do that job. And for example, maybe I'm just starting out, right? I'm a junior partner or something like that, or junior associate. Sorry, not partner, associate. Maybe I want to learn how to do, I don't know, something with data analytics, right? And someone who is a data scientist can teach me how to do that with Tableau or Alteryx, something like that, or even kind of a crazy in-depth analyst, right? If I'm just trying to learn how to become an analyst, stuff like that, that's okay. And I think that's the ecosystem that is coming from it. Yes, there are bad, but there's always been bad. Even in, for example, traditional media, there is the charlatans.
Yeah.
So it's never something that's not existent, and YouTube's like kind of just now allowing it. It's always been there. It's just now, I guess some people are noticing it more, a little
Yeah.
bit.
And you're actually doing a course as well, right?
Yes, but that one's going to be pay whatever people want.
Yeah, okay, I should have said that when I talked about it. So you're doing a course, and the idea behind the course is people can just pay whatever they want for it. So if they want it for free, they get it for free. If they
Yep.
want to give you 10 grand, they can get it. They can give you 10 grand.
Yep, if whatever they want. So because the idea behind it is the course is going to be derived. It's going to be kind of like a finance derived course with accounting mixed in. Teach a little bit about personal finance stuff and non-personal or investment stuff, analysis, stuff like that. And the idea behind it is sometimes, not sometimes, a lot of times, the people who need those courses the most are individuals who could not possibly pay. And it would be almost like insane. Like the first lesson, Finance 101, don't buy a course for $1,000, right? Someone has $1,000 in their savings account and they're buying. And then, so for example, Strongman did a really good job, which is what drew me to his channel. Drew me to his channel. For example, he kind of was interviewing people who were going to this individual selling these crazy expensive courses, and the salespeople were, almost encouraging the people on the phone, according to the interviews, to take it out on their credit card. And I was like, what the heck? What is this? So that's why the model is going to be pay what you want, because again, it kind of aligns itself with the goal of why the channel was started, and it's to, again, help people in that capacity. I call it making a positive impact on someone's investment journey. It's typically what I say. But
Yeah.
yeah, it's going to be, I'm gonna put like a decent amount of effort into it, it's going to, I am ending up going to host it on YouTube, because I went to these other sites like Udemy and stuff like that. I sent them a sample and they started contacting me about it. But then the thing is, if I did it on their sites, if I were to do it for free, for example, they limit me to 2 hours. But if I don't do it for free, I'd have to give everyone like a promo code, and I don't even know if they're going to put limits on me. Imagine that, like they host my whole course, and then I just give everyone the free promo code. So
Yeah.
I don't know how they would like that, right? So it's just,
Mm.
YouTube's going to be easy. I'm just going to create a playlist, and then in the description, I'm going to put like, word problems, stuff like that, actual like assignments or homework. I'll be like your mean teacher. I'll post the answers too, but I'll apply that trust to the audience to not cheat on the problems. So
Yeah.
stuff like that.
So how long is a course like that going to take? Because if you're covering, say, personal finance, investing, and also accounting, I mean, it's kind of like what we were talking about before about when you go into researching a certain topic, there's so many different layers and it can take so many different directions. So how are you going to kind of like figure out like if you've covered everything that you need to cover and whether or not it's like, understandable, and if you're covering things in the perfect order that people need to understand them, like that must be a huge undertaking.
So if you remember from the way back in this interview, my previous profession before I did now was I had a tutoring business. So I tutored people. I actually, the one person that this is actually, I can say this now, because this person is now, they're way done with this. And they knew I wasn't. They just trusted me that much because they were a longtime customer. I tutored someone through their MBA, but I don't hold an
Wow.
MBA. So what I would do is I would study the material and then figure out how to explain it to someone else. And then I would explain to this person. And this person was my customer for a very long time. I helped them through their finance degree and then through their MBA. This is, of course, legitimate means, like not doing their exams for them, just teaching
Mm.
them. And the actual experience I have with finance majors or accounting majors when I did this tutoring, I still have all my material. So I'm going to basically be compiling that in the same order in which I did those tutoring lessons. So I have a backdrop or an organization to do that. And then I'm gonna obviously smooth it out a little bit, add some more things, and then do it in a video format. So I have to think about how to best execute that. And also, I'm gonna do it piecemeal. I'm not gonna do it all at once. Definitely,
Mhm.
I don't have the time to do it all at once. I'm gonna do probably maybe a personal finance. Maybe you can give me some input here. What do you think I should post out first? Personal finance, or accounting? Because those I think are three separate. Personal finance is like, what are these different kinds of loans, stuff like that,
Yeah.
credit cards, stuff like that. And that's more or less the most basic. Then obviously finance, which we have the basics of DCF and all that. And then
Yeah.
we get into accounting, which is going to be like for a lot of people, for you're one of those that wasn't that bad. But for a lot of people, that's going to be
Yeah.
like, ugh.
Yeah, I mean, accounting is just I mean, it's honestly one of the most painful things to learn. Like, I remember, like, in my early days, like, for me, like, it always just came pretty naturally. Like, even when I first started, I'm like, this just makes sense to me. Like, I can understand why things are the way they are. And honestly, you can tell a lot about a company just from the way they do their accounting. Like, if you look at Berkshire Hathaway's financial statements, they're pretty easy to understand, even though it is such like a complex company. Whereas if you look at some of these other companies that are not worth only say like $1 billion company, there's some things in there and I'm just like, I'm like an accountant, like I'm almost a CPA and I cannot understand anything that's in here. Like there's these like I've never seen these terms before. I don't know like why these numbers are showing up. And I'm just like, I mean, because I was like taught that accounting is all the same. Like it's one accounting standard that's, well, I guess a few different accounting standards that get applied to all companies. Um, but within that, there's just so much wiggle room, and you can see that happening in real time with companies. And that's one thing I've learned, I guess, from my accounting training is like if you're reading a company's financial statements, if you do go the route of picking individual stocks, I know not everyone does, and you can't understand what is being presented to you, then you should, I would say, just move on.
Yeah, and actually, one thing that you're describing is probably the most nightmarish thing about creating an API that ports in this data. It's all the different companies calling them different things.
Yeah.
Well, not, they don't call it completely different things, but they, you know, they'll have varying words for it. And that actually causes sometimes websites like Seeking Alpha or Yahoo Finance to sometimes be not correct in some of their measures, because these companies, you know, they don't call it all the exact same thing.
Yeah.
And then you must love the non-GAAP metrics, right? You just love that one when
Oh
they
yeah.
just start. Yeah, yeah. I saw this one creator who you'll probably love this. I was reviewing his analysis. He's a much larger creator than both you and I, and he had
Hmm.
this spreadsheet open, and it was EBIT, right? And he was removing taxes from EBIT, right?
Hmm.
It's almost as if he forgot what the acronym meant, right? So he
Oh
didn't
yeah.
spell out the acronym. Um, and yeah, no, that was actually beautiful. And he was doing an analysis on Pinterest. I know that the analysis. I don't know if you know which creator I'm talking about there, but
Mm.
I don't know if you want me to drop names here.
You can if you want. I mean,
Okay, it's
I mean,
this.
I'm not trying to make this like an exposed, type of
No,
channel,
no, no.
like, but I guess like, like dropping a name probably isn't gonna hurt.
So this individual, again, yeah, because I understand this individual's name is I forgot his last name, Sasha. So
Okay.
he's, yeah, so he did a nice analysis where he again put EBIT, and then he subtracted taxes from EBIT, but he called it EBIT. So he called the
Mhm.
subtraction EBIT. So he had two EBITs in his same sheet. And then there were
Yeah.
some other things that because I get our requests that people, the reason why I'm mentioning is people ask me like, hey, can you review this person's analysis? So I'm getting almost doing like an inception version of an analysis. So an analysis of an analysis, and then my analysis of that company, right?
Yeah.
But you know, that's kind of like something interesting that I've been doing with that.
Yeah, I think whenever I come across like non-GAAP metrics, just the account in me, it just says BS, BS, because
Yeah,
like there's always leeway there. And like I do, like I've talked about this a few times, like over the videos that I've made on this channel, and like it is obviously in the company's best interest to be truthful in what they report, because if they
exactly.
get caught, blatantly showing manipulation, then people won't invest in them, right? Which is obviously not what they want. So like it's like you shouldn't go into it always assuming that there is manipulation, right? And I
Yeah,
did a video on REITs recently and talking about FFO and AFFO, which you know I guess are non-GAAP metrics, so companies can kind of choose what goes into them, what comes out of them. And yeah, the whole point of that is just take these with a grain of salt and don't put too much weight on non-GAAP metrics. Like me personally, like when I'm deciding, like I want to go with, picking individual stocks versus index fund investing, because I think now I'm like half and half between the two. Um, like the first thing I'll look at is like how much, like what's the cash flow of this company versus what it's paying, and that's kind of like my first filter. And even cash flow is like a non-GAAP metric. I mean, it's generally accepted, like how you calculate it. Um, well, there's a lot of definitions. I don't want to get too technical on a live stream, but you get what I mean.
yeah, yeah, of course.
Yeah.
On the REITs topic, are you an FFO man or an AFFO man? You know, there's
Well,
always a
I'd say
debate.
more AFFO.
Yeah, yeah, same.
Yeah.
So, do you have any? I guess on an individual stock topic, do you like that? What's that? You guys have a REIT. Oh my gosh, how am I forgetting the name? It's almost like it's Canada's like almost.
Was it
Um,
Rio Can?
Ryokan. Yes,
Yeah.
yes. Do you like
Okay, yeah.
Ryokan? You taking a look
Uh,
at them?
I haven't really taken a look at them. Honestly, like the reason I bought the only REITs I've really looked at was retail REITs because during like April of 2020, I saw that they went down a lot and a lot of them were trading at like point 0.5 book value, which is interesting because going back to accounting standards, like if you
Hmm.
have a property that is used for an investment purpose, then it's always going to be valued on the balance sheet at the company's estimate of its fair value, which for the REIT I bought, they actually use the DCF method to value their properties. So if it's trading, so it's not like, they have this building that they bought 30 years ago that's the book value is just way different than the actual value. It's, assuming that they're correct, like the book value will be approximately equivalent to what the fair value is. So if it's at 0.5 times that, unless you think that no one's ever going to step foot in retail locations again, then and plus there's like a 12-10% yield on it, then it probably makes sense to buy that. And that's I didn't put like a huge position in it because I was still kind of like in school at the time trying to not have to take debt on to, pay down tuition and everything. But I mean, it worked out well, and I was pretty happy with that investment because it was an example where, I had like a thesis and then I stuck to it, right? Um, and it was kind of, a time where there's a lot of fear in the markets because a lot of people were selling. Um, so I was pretty happy with myself with that one.
Well, yeah, in that case, you prove that in the moments of fear, you would actually be buying assets. So,
Yeah. Well, I
yeah,
mean, it's always easy to say that, but I'm sure if things did look a lot more grim, because I mean, even at that time, like, um, I guess like there was a lot of selling, I guess, early March, April 2020, but I didn't live through the 2008 financial crisis. I did, but like I was too young to really remember anything.
yeah.
But I get the sense that what happened then wasn't as bad as what happened in 2008.
Yeah, no. For no, 2008. Again, I'm in the same boat as you. I was too young. I was not in investing career in 2008. But we have to supplement our age gap with, I guess, knowledge and reading and learning stuff like that. But
Yeah.
yeah, like 2020, I actually was writing on LinkedIn at that time because I was kind of new to my current workplace. I was only working there for about a year and a half, and then so I started writing professionally, not professionally, for free on LinkedIn, like blog posts. And then I wrote an
Mhm.
article. It was on the website that is now down because I'm now building the website from the ground up, but it's still on my LinkedIn. And it was actually saying that uh, the Fed's policies were going to eventually drive asset prices. And then, and I think it was, I posted, I can't remember. It was in March though of 2020,
Yeah.
and I just put like screenshot. I felt so nice to put screenshots of like me selling the bond positions and then transferring those into.
Mhm.
And then in hindsight, that ended up being really good. But yes, if things had gotten worse or we have been shut down like crazy for a long period of time, would I have been comfortable with that? I don't know. I don't
Yeah.
know. We'll never know ulterior
Yeah.
timelines.
So what are your thoughts on kind of what happened in the broader stock market throughout 2021? Because obviously for a long
Yeah.
time it seemed like it was kind of like the classic like market euphoria where you had all these high flying names just like, going up 200, 300, 400%. Like throughout that whole time, I guess like a lot of that happened in 2022, or 2020. Were you just kind of like, this is just like insane, like everyone is super irrational and like this is just propped up by the Fed? Or were you kind of like, like maybe there's something here?
I love this question because it's multi-layered, but
Yeah.
so I'm not going to give you the political answer. So please stop me and say you didn't answer this question. I'm not doing it on purpose. I promise. So
Mhm.
number one, yes, I did think it was a little bit euphoric. I don't think it was necessarily propped up by the Fed. It's kind of a mix of a bunch of things. So with Federal Reserve action, there's a lot of psychology involved, not necessarily application.
Yeah.
And you can kind of point to unique circumstances. People who had never been exposed to investing were all of a sudden very interested in investing. Anecdotal evidence. I had a friend who to up until that point could not care less about investing. All of a
Mhm.
sudden was investing in all these very crazy, very speculative assets. And I'll name some stocks here, and because we're not mentioning this person's name, so they shouldn't mind. But this electric car company, I remember that one. I remember Arkimoto, Lucid. Lucid was one that I did play as a gamble for fun back when, because my literally entire thesis was I'm going to sell it to a greater fool. So the liquidity, what I called it was like the liquidity inflation. Basically, if you saw the data at the time, and still to this day, we just saw a little bit of the unwinding, which I call the liquidity crunch. The a lot of people were taking speculative bets with margin, a lot of margin debt. When we see events like this occur, we do see speculative assets rise in price. Lots of debt taking. People are essentially, how other people call it, shorting the dollar because of the perception. And this is where I'm tying it back to psychology with the Fed. They think it's money printing. And so when they think it's money printing, they short the dollar. How do you short the dollar? You borrow, right? That's one way of shorting the dollar.
Yeah.
When you borrow and you buy assets, there's one thing assets will do. They'll go up because you're increasing demand, right? You're increasing the buy volume. So 2021, the beginning of 2021, we saw it ramping up drastically, right? And then if you were looking at the time and you saw the amount of leverage taken on, I mean, you can think of it anecdotally from your own personal experiences looking at Wall Street bets, right? What do you see there? You saw what we call, I don't know if I can say that word, but loss P. You know, people know
Oh
what that
yeah,
word.
yeah.
Yeah. So they call that on the internet loss P. Use your imagination for what the P stands for. What was the common theme? Again, this is anecdotal, but if you looked at the data, it kind of matched more or less in the macro set. People were borrowing tons of money to buy speculative assets, a lot of new people. And by the way, this individual who I was talking about, they did that as well. They bought into SoFi, Canoe, Archimoto, a lot of electric Lucid. And by the way, when I played the Lucid one, I never sold at the top because I didn't even think it would get to 60 or wherever it went. I just did sold it like that. And again, it was not my whole portfolio. It was a very small amount. It was for fun.
Yeah.
So if I had known, obviously with the guarantee, knowing what I know now, of course I would have put 100% of my assets. But you never know in the moments. And that was just a fun game I played with a different friend of mine. So I think the other one was Palantir. Palantir is another great example of kind of what occurred. The investment base or the the investor base of that asset was almost entirely retail. I don't think the average person knows exactly what Palantir does. And I know I'm mispronouncing it. I got in a comment in the video that I can't pronounce Palantir. I don't know why, whatever.
Palantir?
I can't pronounce it. Palantir. Palantir. I can't do it. But you get what I'm saying. It's so yeah. I hope, did I not cover one of your points in the question?
No, you got it.
Okay.
Yeah. Yeah, I think because throughout that time, I mean, and you're kind of seeing a lot of it reverse now, which is interesting
Yeah.
because it seems like all of those companies, they've just, they've come out, they've released their financial results, they released their guidance or whatever,
Yeah.
and it's just always below expectations. And then it's like 30% drop in one day. So
Yep.
to me, it just seemed like, if say you're trying to study this whole market cycle that happened, you couldn't even really call it a market cycle because it only happened throughout the course of 18 months, really. It was just kind of something that was propped up for a variety of reasons, right? Like you can look at margin debt, like the psychology of
Mm-hmm.
how people looked at what the Fed was doing and all that
Yep.
stuff. And I'm sure a few other things as well, like people just more speculative behavior, right? Which tends to be a bit self-reinforcing because then people see people making a lot of money on speculative bets, so that
Yeah.
encourages more speculative buying. And then also inflation being high, which I don't know if there's any, research on this, but it's my thought that if inflation is high, then people are probably going to be driven more towards speculative investing because you're going to think if inflation's at 8%, I need to beat that in order to earn a real return.
Mm-hmm.
So, I mean, inflation wasn't really a problem until I guess kind of in the past year. I mean, it initially started out there is no inflation, then there is inflation, but it's transitory, and now it's just inflation.
Yeah. You're exactly right on that. I'll add this. My home country, my birth country, Venezuela, I think it was 2018, had the best stock market returns in the entire world in nominal terms.
Yeah. Yeah.
So keyword nominal terms. Real terms, I think it was down like 97%.
Wow.
But in nominal returns, I believe the number was, it was up 200,000%. Because that is an example of your currency becoming worthless, and
Yeah.
assets are a better way of protecting money in the case, or value in the case of inflationary environments. So, but you're adding even more to that, where you're saying not only does the inflation perhaps might or might not do that, right? But the psychology that drives behind that could also drive that. Exactly. If people think that inflation will ramp up, they're going to be more likely to say, okay, how do I protect my money? A good example is more anecdotal, but I think it's fair. You go on TikTok now. Do you use? I don't use TikTok often until more recently, because now I'm just trying to set up there. But I've
Oh yeah, I
noticed there.
saw you had the impersonator,
Yes, I
right?
had the impersonator, which we can talk about that.
Yeah.
But so now I just started like looking at TikTok, and I haven't really. I saw only YouTube creators sometimes cover TikTok, and I think sometimes they post TikTok on YouTube Shorts. That's more or
Yeah.
less the same thing. And you see a lot of the finance TikTok. They say inflation. What should you do? You protect your money. You put it in assets. Assets go up and inflate. Like, it's very short videos, just saying that over and over and over again. And I see a
Mhm.
ton of that. So I can't help but think that a lot of people are absorbing that, and then they're thinking that as well. And then that's
Mhm.
might be driving, pop culture behavior with, I guess you could call retail investing.
Yeah.
Not all retail investors, because obviously I know that your audience, and hopefully my audience as well, I think my audience too, they're not just getting started, as more like the TikTok finance kind of targets.
Mhm. But do you
So
think that, like, this wave of retail investors can influence, like, the broader market that much?
not the broader market, but smaller market cap companies, yes. But not the
Mhm.
broader market. Like, they're not going to touch Apple. Like, they're not going to move it. They're not going to
Mhm.
move. They're not going to move probably any stock within the S&P 500. It'd be
Right.
very difficult. But the very small ones, like we're talking micro cap, yeah. And I think,
Mhm.
strongman's covered this a lot. I think that's why certain creators talk about those ones a lot,
Mhm.
because
Yeah.
those are the ones that absolutely could be pushed up by retail money, excitement, stuff
Mhm.
like that. Definitely.
Yeah, I mean, like, the conflict of interest in some of those videos is just laughable. Like,
Hmm.
here's a video, I'm gonna be, looking at this stock, and by the way, this video is sponsored by the exact same company.
Oh, I know who you're talking about.
Yeah, I mean, I saw that and I'm like, how do
Yeah.
you release that on YouTube, man? I just I
I
don't know, like, I guess these things happen when you're in the grift era.
Yeah, I think that individual's view count was actually on the decline anyway, and he was kind of going on
Mhm.
a last hurrah. He was probably offered a lot of money, and he's probably already diversified his wealth. He's made his money from YouTube, not from necessarily
Right.
his investment performance, but YouTube, which on its own is not terrible. I can't say that's terrible, but that last thing, I think it was just a hurrah. There's no way I can believe that person thought that was going to age well. I I
Yeah.
I can't think
Yeah,
of
I
how,
mean,
but
unless you're just so, like, corrupted at that point that you just
yeah,
can't, like, understand, you
yeah.
don't have any sense of logic or anything, but yeah. I'm going back to the thing we were talking about, though. There's one individual company I wanted to ask you about.
Cool.
It's another one of these, like, high-flying names. Are you familiar with Snowflake?
Oh yeah.
Yeah, so do you have any opinions on them?
Very expensive. Technology, probably the average retail investor doesn't really know what they even do. A lot of excitement behind them, but their services per se are more or less a threat to be commoditized. If I was an investor, I'd be very afraid of AWS, which I do hold a position in Amazon. So I want to say that, because some people might say that's bias,
Mhm.
but I hold a position in Amazon. It's not even like big position, like crazy. My biggest position is Google. I'd also be afraid of Google, but I just want to, say that I'm long Google and Amazon. There's my biases. Um, so I would be, if I was a shareholder in Snowflake, not only would I be afraid of multiple contraction, because the market for doesn't love my company anymore.
Yeah.
Uh, Also, I'd be aware of, as far as the underlying technology and services, that these other companies kind of more, they, oh, and I I'm not long Microsoft, so I have no bias there. I'd also be afraid of Microsoft Azure kind of directly integrating Snowflake services. Maybe you're betting on that Snowflake gets bought out to some
Mhm.
degree. I think Snowflake sometimes is put into the same category as Palantir. Don't really know
Mhm.
why. When someone does that, they're actually, that kind of tells me they don't know what those two companies do.
Yeah.
I mean, and I'm not a subject matter expert in data science, data analytics, or that underlying technology. I won't ever say it because I don't work in that field. That's how I think someone has to be a subject matter expert. I want to be very clear. But for example, know just enough to know that those two companies aren't exactly the same thing, but they're put together in the same basket, and to know that uh, AWS engineers at AWS, or AWS as a company, is very aware of what Snowflake does and is trying to come after Snowflake's lunch money. But yes, hopefully that answers
Yeah.
that.
Yeah. Well, the whole like, I mean, like I kind of see this happen at work because I do like a bit of stuff with like cloud and like you see like all companies just moving to the cloud now, and that's
Yes.
I'd imagine that's one of the reasons why you're long on Amazon.
Yes, I trimmed the position on Amazon. I used to have more, but I kept a decent position. I believe, just to quote numbers, like 2% of the portfolio. But yeah, that is one of the reasons why I'm long Amazon.
Yeah.
I'm long for several reasons, and I'm hoping that we get a nice comeback, and then I add. Otherwise, my sales are going to look really silly if it never reaches there and we just enter complete exuberance and it just goes to
Yeah.
$7,000.
Yeah.
But
So yeah, Snowflake was like one company that I was kind of looking at, kind of during like the peak like irrationality because I'd learned about it a bit, and I was like, you know, and then I'd be like reading through their like presentations and everything, and then I kind of just stopped because I was like, I felt like I was getting not like swindled, but like very much like persuaded just by their advertising. Like they did a pretty good job of like advertising their company to investors, and a
mm,
lot of people like seemed like very excited about the company and not really considering, I guess, the competition, which you touched on for a bit, because I mean, like there is some difference between them and Amazon that like they don't host like data centers,
no.
Snowflake. But like Amazon basically has a whole suite of cloud services built on top of that. So like they do intersect with Amazon in some way.
Yeah, and I think, well, from what I've discussed with who I consider to be subject matter experts, which is what I define as people who work in that field, I've gathered that Amazon is very aware that Snowflake obviously exists, and they are very much investing in ways to very much compete in every single aspect that Snowflake does. So you could be investing in it and you could know more about it than I do. That just puts me in an uncomfortable position already. Like I always say that with when I look at a stock, I might not know something with that my audience members do know. And I'm perfectly okay with that because like Buffett says, you don't have to swing at everything. So I'm okay with not knowing. And the audience member says, okay, I work in that field. Snowflake is, top of the line. They're going to always exist. No one can replicate what they do. Okay, cool. Then this investment might be for you, but it's definitely not for me. And because investing is about, also feeling right with your investment. I would not be able to sleep well at night because I clearly do not fully grasp the core competencies of Snowflake as far as how they can differentiate themselves from what Amazon could ever do to compete, or Google or Microsoft, these other bigger boys. And then all I know is that, for example, these guys, well, they're very heavily involved. They have very good relationships with a lot of clients for the cloud, and they have like all of them have massive war chests. Snowflake, do they have the same massive war chest? That doesn't mean that they're going to kill them, but it does add some layers of concern that I would have to get past. And in order to do that, I'd have to know a lot more, right?
Yeah, like I feel like having just like knowledge of like if you work in like a data science type of role, or you work in like say you're like the CTO of a company, like
Mhm.
you're at such an informational advantage over other people on these things. And you can see like these trends happening in real time at work, and then you can see companies like Snowflake coming from a mile away. Like you can see like what they provide is obviously useful, but like the company was just like ridiculously expensive, like 100 times sales. So I'm like, even if I believe in this, like basically what's priced in at that valuation is
Yes.
that they're literally going to be one of the most successful companies ever.
Yes.
And that doesn't, that doesn't really give me much confidence.
Exactly. Yeah, exactly what you said is perfect. What's priced in? People don't consider that sometimes.
Yeah.
So all that could be correct. They become a very large company, they make a ton of money, but then is that priced in? Is the market already assuming that that's a reality? Because now you're exposing yourself to the risk of will it? Maybe it doesn't, and then you have permanent
Mhm.
capital loss.
Yeah, which is basically what's happened since then.
What's it at?
'Cause I
I
think
don't pay attention to it. What's the price?
uh it's down a lot here. I can check. It is 209 right now, and it was let's see, November 2021 it was almost 400. So
Wow.
yeah. Yeah, so that's something I talk about a lot on my channel, and that was like one of my first videos, which I wouldn't recommend watching that because I didn't really know how to make videos at that point, and I was like
No
stumbling my
worries.
words and everything. But um yeah, like, because I saw, like, a lot of people, like, a lot of younger people or people getting into investing, they say, like, "I want to invest in Disney," for example, because I think Disney Plus is gonna be an extremely successful. But then I'd say, well, the second step of that is, okay, how successful do you think Disney Plus will be? What does that mean for Disney? And then tie that back into their current valuation, because if Disney Plus being successful is already priced in, then if it does end up being successful, then as successful as you expect, then you don't make any money.
Absolutely. Yeah. It goes back to that. If it's priced in, yes, it's already priced in. Now you're exposing yourself to risk. It doesn't, it doesn't succeed. What are your thoughts? Because I see in the comments, they're talking about Zillow. Do you have any thoughts on Zillow?
I know you covered Zillow, a lot. I honestly should have made a video on Zillow, like, when I started the channel initially, because I remember looking at it the first time and being like, a lot of this was just, like, flipping houses. That was a
Yes.
big part of their business, and that was one thing that really caught me off guard. Because 'cause I'm like, well, I mean, generally, you think of Zillow as, like, a technology company, which I understand they don't do that anymore, right? Like, they don't do the house flipping now. So, yeah, it's kinda like, well, I mean, a big chunk of their business model is just built on housing prices going up, which, I mean, if 2008 taught you anything, you'll know that that doesn't happen forever.
You mean houses
That's a
don't
trend that
always
occurs.
go up?
Well, unless you live in Canada, then they
I was,
do.
I was about to say, hey,
Yeah.
uh, Canada.
I mean, I don't wanna touch on those housing prices again. Might
You don't
get
want to
too
be
triggered
reminded.
over here.
Yeah,
But yeah,
with
honestly,
Zillow.
like, not too many thoughts on Zillow other than, like I said, I kinda just took a quick look at it because I was curious, but quickly realized, like, nothing for me. But you talked about it a lot, right?
Yeah, Zillow, exactly what you said. I didn't like it at the time when it was doing the house flipping. I thought they were exposing themselves to crazy amounts of risk. And that I think was the first video that I touched upon it. My co-host Austin had an investment, but that was born from previous. And he was kind of like uh, kind of coming onto his own as an investor. And he's still doing that, and really proud of him actually. And he has an accounting background, by the way. He's actually like you. He's working right now, tax busy season,
Mm,
dying like a slave.
yeah.
But he well anyway, with Zillow, I didn't like the aspect of flipping houses. Again, too much risk. But when they got rid of that, I thought of them again as that they're in my speculative side of the portfolio, just to be clear to everyone. What I see in Zillow is the potential, and that's the key word I'm going to circle and put a star around it, tie a little nice bow tie, everyone focus on it. Potential to become somewhat of a Google of home searches. And then when I say the word potential, immediately uh, I start to think more like speculative, right?
Mhm.
Because it is just that, it's like raw potential. So it's kind of like looking at a baseball player for an analogy, and you're looking at him in the little leagues, and you think this guy has potential to go pro, right? Can he go pro? Maybe, but like, will he go pro? I don't know. I limit the exposure I have to it, but I can envision it. And if I can't envision it in the first place, by the way, none of my speculatives are there if I can't envision it, except for two of them. I want to. Two of them I hold, actually, no, three of them I hold for YouTube accountability. But yeah, Zillow is there because I can see that it can get there. I just don't know if they will get there.
Mhm.
If they execute well, sure, they're going to be there. But who knows?
Yeah. Yeah, one thing I've kind of noticed with software companies, that I've looked into them a bit more is it tends to be like a winner take all market where you have
Hmm.
one company that is the dominant player, right? Like
Yeah.
um Salesforce is a good example, right? Like with
Right.
CRM systems, they're the vast
Right.
majority of the market. And Salesforce is another company that, you know, you can tell it's like a strong company. It's a company that I've personally been looking into. Um, but like the valuation is quite high. So they do have
Yeah.
excellence priced into their market cap. And then another one is Workday. So
Yeah.
they're kind of like an HR type of like software as a service company. So yeah, like that's another one where, I don't know like the intricacies of that specific software segment, but from what I can tell, they make up a pretty big chunk of that market and they're valued extremely richly as well. Um, I know you did a video on a company called Alteryx. That's the software I use at work sometimes. I mean, I don't think they're super dominant, but I know they're kind of like in the robotic process automation space, and I think that's a bit of like an interesting space because you have UiPath is another company that's in that space that's kind of up and coming. Um, so there's certain, like these companies are all priced as if they will become those winners, but obviously not all of them will. Like a price to sales in like the 50s and 40s, or the Snowflake, it's in the hundreds, which like is absurd to me. Like that, I mean, like I thought Snowflake was a strong company, but just that valuation multiple seemed crazy. So that's something I want to do more videos on because like that's a personal interest of mine, like because I do kind of work in like accounting, but also a bit of IT. And I wanna look into more about, like, what actually makes, like, a software company become the winner that takes all, you know?
Yeah, because finding, let's say, I think it's an overused analogy, but finding the next Salesforce. I mean,
Yeah.
that's would be an interesting endeavor. Or is the next Salesforce just Salesforce, for example? That's another analogy, or not analogy, common phrase people say,
Mhm.
like usually in reference to another company, like the next Netflix is Netflix, for example.
Mhm.
But yeah, no, that whole space, there's so many different names. Like you start to notice, like we're still technically in the software as a service space in the very early innings, where you have so many different companies and new companies just starting up here and there, and it's so fragmented. It is kind of daunting just looking at how many there are, and then trying to from there parse a winner or semblance of a winner
Yeah.
is even more difficult without having some sort of industry edge or industry expertise. Like you just mentioned Alteryx, but like Tableau just got bought out by Salesforce, right?
Mhm.
And so they have that whole client relationship advantage. That does that mean they're going to win? No, it doesn't mean that, but it is an advantage that you got to think about, right? If
Mhm.
Salesforce comes to me and says, "Hey, if you go for a whole suite of systems, we'll give you this sort of bundle discount for your enterprise." Now, then Alteryx has to be that much better to make it so that that industry or that enterprise just will say nah to Salesforce and say, "Okay, here you go." So, for example, the my new employer that's coming up, I know that they're making the switch from Tableau to Alteryx. So they're a fairly large enterprise, and the fact that they're doing that is interesting, right? Because I know that they use CRM's products for other aspects of the business, yet
Mhm.
they're making that switch. So it's like indicative of something. Company I am interested in, and I don't know if you've taken a look at them, Spotify. Spotify, I haven't bought any of it yet. I'm still
Yeah.
in the learning process, and this can take from 1 week to a month or several months, depending on how complicated the business ends up being. I haven't made a video on it or anything like that. I'm literally just in the learning phase, um, but I'm interested in it. What you have any
Mhm.
thoughts on that company?
I actually did, in, like, my last semester of school, so, like, at the end of 2020, I did a project on Spotify in a finance course, and
Oh,
the
I
whole
want to
project
know.
was, like, value a company.
Yeah.
Spotify, which I didn't wanna pick Spotify because they weren't profitable at the time, and I wanted to pick a company that was profitable. Um, But then we had to come to the conclusion where it was like, if you conclude that the company is currently not profitable and like it won't ever be profitable, then you would value it using like an adjusted book value type of method. And then that's what we ended up doing. So our conclusion was that Spotify was like ridiculously overvalued because we were just kind of looking at the business and we were like, well, their gross margins are pretty low, like for a software company, because they do have to pay a lot of money to the creators, right? The artists and
Royalties.
whatnot. Yeah, royalties. So that's a big flaw in the business, you know, like they don't have the margins that a Microsoft or most software companies would have. Um, the other thing we saw is like they're already the number one streaming service, right? So how big is a streaming service market first of all? And like there's other competitors, obviously there's Apple Music, there's Tidal, which I don't really think anyone uses Tidal.
We're back.
Okay, I'm back. Yeah.
Yeah.
Yeah, okay. I think that was me. Oh, yeah, looks like my Wi-Fi connection's getting better. But yeah, so Spotify, we were kind of, yeah, like we were talking about the different like competitors in the market, and we said, how big is this market really? Like they're gonna have to expand to all these different countries and anything. So I mean, I haven't really taken a deep look at the company since then, so my conclusion would still be I'm probably not going to look into it, but I'm sure based off what I said, you'll have some counterpoints.
Well, not so much counterpoints in the sense because that's actually the key deterrent is actually the royalty side of the business because is it scalable, right? That's the question at the end of the day. And have an easy.
Mhm.
So everyone I know, this is completely anecdotal. I don't like to use anecdotal, but when I reference it, I like to make sure I acknowledge it's anecdotal. Everyone I know uses Spotify, right? That in and of itself is not evidence to say it's a great company. But what I noticed is why did I get Spotify? All right. Well, why I started getting Spotify because all of in my inner circle, they all said you should use Spotify. They like to share music and stuff and do that. And so it provides that sort of network effect, right? But then we get to the question of artists. How do they make the platform good? Well, we have convenient of news. He said that. And I agree with that. It is very easy to use system. I know, for example, my parents use Spotify. They are both
Mhm.
customers of Spotify, and they find it very easy to use. And my grandparents use Spotify. Even a step up, they find it very easy to use. Then we get to the question of the artists, right? Well, the artists in the beginning, I kind of think of it as that's the problem they have to overcome, and that's the point the point of risk, right? Because that's actually where the margins are getting squeezed, which you already know, right? You pointed that out perfectly. The margins are getting squeezed because they have to pay out these royalties. And for example, when I have a subscription, let's say I listen to an old song that is owned by some studio or whatever, they have to pay royalties to that studio each time it's played. We won't know or have the privy details of that exact negotiations with that studio, but we can assume they're paying some fee to that. If I play it a million times, it may be that they're paying that studio a million times, right? Let's just say
Mhm.
hypothetically that they are. Well, if my subscription is $10 a month, right? What happens when they run out of my $10?
Yeah.
Let's say I'm a customer that squeezes out $12 a month. Well, that $2 extra has to come from something, right? I'm not listening to ads because I have a premium service. I'm paying for not having ads. Well, that has to come from Spotify. And presumably that comes from Spotify's other revenues, which is their ads that they generate from the non-premium members. Because I think they have more non-premium members than premium members.
Mhm.
So from there, we start to see the vision of could they possibly overcome this? Well, I think that the potential that I'm watching out for, or I'd be watching out for, is can they get to a point where they become the place that you have to be? And I kind
Yeah.
of think of like YouTube, like the YouTube competitor is what? Rumble? Yeah.
No.
Like what's the YouTube competitor? Where can I post a video? If I was a content creator, like you know, maybe Twitch, right? But that's different. That's
Mhm.
streaming, right? So if can they get to the point where you have to be there, and through there can then they negotiate and use that leverage to get favorable terms? And I think what a good move for Spotify would to be is maybe buy out some of these studios that own the IP. That's on a surface level analysis. So, like, I think that might be a good move for them, and then kind of slow down over time that payments that are leaving the business. Kind of own the IP, maybe be a more direct service line to artists, where you basically are the record label, for example, or the record company that you
Yeah.
kind of make a negotiation with that artist. Um, that over time, I think would be a good move for them. Can they execute on that? We will have to see. Will they be allowed to do that? Maybe antitrust comes in. All these things, you know, kind of come in. It goes
Mhm.
back into right now, it's so far in the bucket of potential and
Yeah.
not so much that the vision is very clear that they can do it. So if I buy it right now, because now I'm getting to the question of, after I figure out the story, I come to the valuation, which I haven't even done yet. But you know, I
Mhm.
presume it's still going to come out as overvalued.
Yeah.
um, I still think it would end up in the speculative bucket right now.
Yeah. Yeah, I mean, and podcasting is another huge part of Spotify, and I guess it's kinda like what you said, like, if they can be the place you have to be, like, you kinda notice this with YouTube now that I've been, like, a creator on YouTube for a little bit, like, I was talking before about how I hate AdSense and how that works, like, that's obviously by design, right? Like, YouTube has enough manpower that they could make that whole thing extremely streamlined and very easy to use, but they don't
Yeah,
have to, right? Because I have no if I wanna make videos and I wanna get recognized for my video creating efforts, I have to be on YouTube. If I go
yeah,
anywhere else, no one's gonna watch me.
yep.
So, if Spotify can become that, then yeah, and, like, they already are kind of that, like, with podcasting, like, I use Spotify as well, I, use it all the time, and, um, yeah, I guess there's, like, a few creators that left recently, which, because of some drama or whatever, but, I try not to follow that stuff too closely.
It
But yeah, like, if they become that place, and they would probably also have pricing power as well, because they can hike up their membership rates, which is a whole new, like, way to drive average revenue per user, which is a big thing for those types of companies. Um, so yeah, I think, like, there's definitely potential, and I'm sure there's some people out there that are very convinced that Spotify will be, like, the next FANG stock, because it has, like, certain qualities. Um, so yeah, like, that'll be interesting to see how that works, I guess.
it if it becomes the next FANG stock, it's got to pass some hurdles right now. So, for example, if it ends up becoming that, buying now, you would be rewarded for that, but you have to acknowledge the risk you've taken on, because any reward that came from an investment always has a level of risk that just didn't manifest, right? Buying now, you have those risks that I've already kind of addressed and more, right? That I haven't even gotten to yet. So those risks could manifest, and then you have permanent loss of capital, right? Because
Mhm,
maybe it ends up being that it's just a commoditized market, and Apple Music's going to destroy them. Maybe it ends up being that the business model is just simply flawed, and there really isn't a way to get to long-term profitability, and the market won't recognize that. Like, for example, I think like Netflix is kind of a still to this day, it's still a question. I brought this up in my Netflix feed. I don't know if you've covered Netflix yet. Have you done a video on Netflix? If you see the accounting, because you'll enjoy this, because the accounting background, but their cash flows are always not, for lack of a better term, they're not high, because they're always spending on new content. And the assumption from the investor base is that one day they won't have to invest so much in the new content. And I think in and of itself, that's an assumption, right? So then the question becomes, what is that level that they can reduce to, where that
yeah,
at the end of the day, the only value of a business is the cash flows it can generate and return
mhm,
to you as the investor. And I think that's like kind of a basics. That if you want to get into the Chinese VIEs and all that, is something that sometimes doesn't resonate, or isn't like really thought of crazily. because that's the problem I have with Netflix. Is I don't know what's that level is, and that makes it very difficult to evaluate. It adds difficulty. Some people say a conservative measure is, or not a conservative, but a good measure is net income, GAAP net income. And then you kind of take that as the quote unquote longer term cash flow levels. Is that the right way of doing it? Maybe, maybe not. You see that's an example of a business that's hard to determine and might be, not guarantee that it is, a business model that turns out to be not so good, right? Because we have cash cows or money printing machines like Google. What a beautiful company, right? Biased, but what a beautiful company. Netflix, not nearly as beautiful in my opinion. Right? So that's an example.
Yeah, I mean, like I'd imagine with Netflix, like I haven't studied the company extensively, but like they always have to make new content, right? Like they can't get to a point where they just have their like with Google, right? Like they have their search engine, which obviously generates them a lot of money, and they are like innovating at that, I'd imagine, and making it better, but it's not the type of thing where you have to constantly invest tons of money into it to keep people interested in using it, right? Like people use Google because they're used to using it, right? Whereas with Netflix, like if the same content stays on Netflix, then people will leave, right? So my initial thought is like, you can make the argument about Netflix and say it's currently not optimized for profits because they're investing in the future. But if they're always going to have to invest in the future, then you
Yes.
could say, well, they are optimized for profits. That's just how the business is.
Yes, exactly. So then we get back to that principle, or that core principle, the value of a business. Like, let's say I have a venture for you, and I am trying to propose it to you. You're this investor, and I'm trying to convince you to invest in my company. And I say to you, over the next 100 years, right, I'm going to have to continually just reinvest back into the business, and I'm not going to return any cash to you in the form of buybacks, dividends, nothing. Would you still be interested in investing in me? Because at the end of the day, the end value that you would be able to realize is simply what you could sell these shares that I would provide to you to someone else, right? And whatever they would be valuing it at. But let's take this further and say, for the next 100,000 years, I will not give cash flows back to the shareholder. I will reinvest cash flows into the business, right? Over and over and over and over again. Well, intrinsically, this is a private business. We're going out of the stock market here. This is just you as a private citizen investing in a private business. Would you make that investment? Now, let me give you some numbers here. Let's say I am profitable or whatever, on a whatever basis you want, and I'm growing at 100%, and you somehow know that it's a guarantee I am growing the business at 100% every single year. It's here to the end of time. Obviously, we're ignoring capital restrictions, capital raises, and anything like that. You just know, the guarantees are my growth, and you're not going to receive a penny from me for the next 100,000 years. Would you still make that investment?
Well, I guess depending on the price, you could value the company based on book value and say they have these assets that you could sell, so then there's some value there. But if you're valuing it in a DCF method, then it's technically worth zero.
Well, this is a private business. You have zero control over it. We're getting out of the stock market. This is a private business. I own this private business. You're a private investor. Would you make this investment? I'm not going to sell any of these assets. I'm not going into liquidation. We don't have that possibility. What's the value, right, to you as the investor? Maybe to me, I don't know. Like I'm paying myself a salary. I'm nice and happy, but you're the investor, right?
Yeah,
And
well,
I control
value
the
to
business.
investor zero. Yeah,
Yeah,
like value to the investor is zero, but because then, like, if you're saying you're not selling any of the assets for 100,000 years, then unless you're discounting those cash flows 100,000 years, which you're talking about, a number so small, it's not even worth considering.
precisely. So it gets to that core question. The end value of any business, any investment, anything is what it will at the end of the day return to you. And the DCF fundamentally is measuring potential. Like scientifically, like getting down to it, it's measuring the potential of said cash being returned to you. And depends on the context of when the DCF is being applied. Is it being applied to a project? Is it being applied to an investment in the stock market, right? Why does Google have value when it's not yet returning cash flows to investors? Well, the answer is simply because it will have the potential to do so in the future, right? Doesn't just be like, because that would answer the question if someone says, wait a minute, by that same logic, a company not paying a dividend or doing buybacks has no value. It's like, no. It's because you're measuring the potential of it one day doing so, the potential.
Yeah.
And that's what a DCF is kind of telling you. It's like these cash flows, these owners' earnings, that's what can be given to you, and that has value. But if I could guarantee you that it would never be returned to you, then we switch it up and say, okay, well, then now the value is derived from whatever I can sell it to someone else and what value they can derive from it. And then I can realize my value. Of course, you mentioned a little bit more complicated topic. If it goes bankrupt, you have the shares of the whatever, and then you buy it below book value. Yeah, all that's true as well.
Yeah, I think once you start to look at companies like that, like just cash generating machines and not like companies, but just like things that have the ability to generate cash and give it to you, then a lot of things just tend to make sense. And that's like before when I was talking about Snowflake, when you're talking about a company that's 100 times sales, you're saying, okay, that's sales. That's not even earnings. Like that's sales. That means that people are saying the future cash generating capacity of a company like Snowflake is so much higher than what it is today that it's almost doesn't even make sense. And I guess like people will have different views on that. Like some people
Yes.
say, well, a stock doesn't have intrinsic value, it just goes up and down. And of course, like if you're of the belief that it does have intrinsic value, it's the cash provide you, you're obviously very convinced that you're correct in that. But not everyone can kind of see it like that, if you get what I'm trying to say.
Yeah, no, I kind of, from my perspective, where it comes from is, uh, and I actually maybe, yeah, it comes from the bias of my line of work. So I'll look at a publicly traded business and similarly, not technically the same way to evaluate it as when we're acquiring, for example, a property or a private business. Similar
Mhm.
thing. I only care about one thing at the end of the day, or I want to know how much cash potential can be returned to me over long periods of time. And it doesn't have to do it. Remember, I say I do value the potential of, right? If I could delay that cash injection back to me and say, keep it, grow the business because the future amount is going to be even better. Yeah, that allow for that flexibility. But I apply that to every single thing: property,
Yeah.
private business, publicly traded businesses as well. Now we can get into the whole acquires multiple thing, and the speculation of something being acquired as a whole different category of investments.
Yeah.
But for the most part, if I'm looking at a business to buy and hold forever, that's one. And I know we
Yeah.
share, by the way, Markel. Uh, you like Markel? I love Markel.
Yeah.
What drew you to that one?
Yeah, so for me, it was kind of I like to value insurance companies just using price to book because for me, you can't really value insurance companies using like a DCF. It's a bit difficult to
Yes.
do. So for me, I kind of saw I can't remember the name, like Markel Ventures, like the
Hmm.
part of the business that is kind of like the Berkshire Hathaway part. I kind of saw that as like a sleeping giant in the business that had the potential to, within a few years, grow to a point where it's worth basically the current price of Markel if it continues on its past trajectory. And that would take, I think, conservatively, I said 10 years, but most likely 7 to 8 years. So then I said, okay, if I buy this now and then I wait those years, then I get my value just in the one part of the business that's a very small part of the business. So then I'm basically getting the insurance operations and everything else to do for free if I wait 7, 8, 10 years, whatever.
Yeah, those business models. I mean, Buffett's talked about this extensively. It's in the hands of a good investor. They're beautiful. Like the taking the insurance float, excess of what you don't need to maintain your liquidity requirements and all that, and being
Mm,
safe and secure. Taking that and investing it into businesses that can have wonderful returns over time. Uh, and like just, I mean, think about it. You're basically, as an insurance provider, if you're doing it well, are obviously making it sound easier than it really is. That excess money is like you're basically given a lot of play money, right? You can make a lot of different investments that provide greater returns than what the traditional insurance companies. Because I saw your video on insurance businesses, very good. Um, Traditionally, they obviously invest in bonds, sporing safe assets.
Mhm.
Markel is trying to become that mini Berkshire. They have the private section where they invest in private businesses, and they have
Yeah.
their public portfolio as well, which is, I think have you valued their private portfolio yet? Or
Oh, you mean the Markel Ventures?
yes,
Well,
yes.
can you really value it? Because they don't disclose that much.
Yeah, exactly. That's why I asked,
Yeah.
because it's it is difficult. I think they do disclose some number, don't they? And maybe I'm thinking of a different
It's
company,
like
but
basic stuff, like what
yeah,
the revenue was, what the EBITDA was. I mean, it's
exactly.
pretty secretive.
Yeah, yeah. Well, because it makes sense. It makes sense.
Yeah.
These are, because they don't buy the whole businesses in some cases. They buy just partial parts of the business. And
Mhm.
you obviously know the strategy. I'm sure you've heard the CEO talk about that, or the co-CEO. I think it's co-CEO.
Mhm.
But yeah, the Markel Ventures
Yeah.
and BAM. I know you like BAM as well.
Yeah, I mean, pretty like both of those companies have a similar theme where you're just putting your money in the like you're trusting the management, right? Like that's
Yeah,
really who you're investing in at the end of the day, which is kind of like Berkshire. So you kind of have to rely a bit on like the track record that management has, and BAM does have a very good track record. Like they've been around for a long time, and even now they're like 100-year-old company that's still
yeah,
like growing close to double digits, I think, which I think is, pretty unique. And then you also get diversification as well, which is great. Like my personal portfolio as it stands right now is very heavily weighted towards the financials. So like banks, insurance, BAM. Like I think I own, I haven't disclosed the company yet, but like there's one other like retail company I own, and then also like um the REIT that I bought, which I still own, which I might sell it honestly, because I don't really have a reason to hold on to it anymore. But yeah, like I'm certainly drawn to those types of companies. I know Boston Omaha is another one that's kind of
uh,
like an emerging one. You probably
yeah.
talked about them.
Briefly, because I started to make kind of a rule that if it's too small, I'm starting to like
Yeah.
not kind of like as a rule going here and going forward. But yeah, yeah, yeah. That company is really, really interesting.
Mhm.
I do own them as well. They're smaller size than Markel and
Yeah.
BAM, by the way. But BAM is interesting macro backdrop. Have you thought about it? Because from the perspective, remember their main business is in managing the assets, for example, of pensions, right? They
Mhm.
explain why they talk about it too, the alternative investment trend, right? As yields come down or yields remain low, these pension funds, they're going to be thirsting for yield. And BAM is there saying,
Yeah.
hey, look at all this. Look, you can invest in
Yeah.
this, invest in that, and we can take a small fee. Really good for
Yeah.
BAM. But
Yeah, that was a big reason why I opened a position initially. Like, obviously, there's other good things like the historical record that management has and everything, but also, depending on if you think interest rates are ever going to get risen, which some people probably think they won't, um, like even despite the inflation that's happening, like I do think that the alternative investing is a pretty good value proposition. And, when there's a lot of money chasing fewer and fewer assets, and, if you believe asset price inflation is something that's happening, then that also it helps BAM because they just collect percentage of their assets. So yeah, I mean, there's a lot to like. Obviously, it's not free of risk. Like they announced that they are thinking of doing a spin-off recently, which I thought was an interesting move. So I did a video on that. But yeah, with Boston Omaha, I was looking at them for a bit, and they are pretty small. They're only like 800 million market cap, and
yeah,
I think in enterprise value, they're only about 500 million because they have a lot of cash and a lot of investments currently on their balance sheet. So I thought that was interesting. And then, but like the operations of the business right now are extremely small. Like if I remember correctly, it's just like a few billboards,
yeah.
broadband, and then like some small like insurance operations, and that's it. And they only have like 50 million I can't remember 50, like it was small numbers overall. Like they only had like 8 million in cash flow from operations or something like that.
Yeah, it's one of those that's going to be a little bit difficult to evaluate because some of the businesses they don't own outright, some of the
Yeah.
business they own outright. They are what I'm seeing, and it's a position that I'm accumulating in my portfolio. So it's not done, and I'm not making a statement by buying it all at once, right? Because I think when an investor buys it all at once, they're making a statement in that's the bottom. right? That's as low as it's going to go. That's why I tend to create a process that I'd rather have firepower going into it and add more to a position than trying to say, oh, that's the bottom right there, stuff like that. So with Boston Omaha, it's one that I'm obviously, I'll say this, I'm still learning more and more about the business and trying to really come to it. Because if I, for example, was extremely comfortable, it would reflect itself as a position in the portfolio. It would be much larger because I'd be much more comfortable with it. But it's a position that I'm just nibbling, just buying here and there, learning more and more about it. I see that they have a mindset that I agree with. They're trying to buy distressed assets, things that people don't really care about, and they're tucking it into their portfolio as kind of cash cows that then they're taking from there and then going investing it into other businesses. You mentioned billboards and broadband. They have investment in a bank that is a minority interest in a bank. They own also some sort of a broker business that, again, it's just a cash cow. And that's actually how the CEO describes it. He says, that's a cash cow for us to take that cash and park it elsewhere. But yeah, that one still has to kind of prove itself. It's not a Markel by any stretch of the imagination. It has to prove itself, right? And it doesn't have the Daily Journal, right? It doesn't have Charlie Munger on the board. So that was another one. But they have, I think, only three or four stocks.
Yeah. All right, man. I don't want to take too much of your time, so we'll probably cut off the stream here. So thank you so much for coming on, sharing your thoughts. Really appreciate it. I think all the subscribers here, if you're not subscribed to his channel, make sure you check it out. It's Capital Mindset. Yeah, do you want to say any closing words?
No, just thank you for having me on. And if you want to do this again another time, just let me know and I'll be happy to hop on. Like having conversations about this kind of stuff.
Yeah, we could do it on your channel as well.
Oh yeah, I got to
We could
set up
get
the live. How do I do that? Where do I go?
Oh,
I can
I'll
just
just
Google
tell
that.
you off air.
All right.
Yeah, I'll give you a little tutorial on that. All right. Well, thanks again, and I'll end the stream here. So everyone watching, thank you so much for sticking around and subscribing and supporting the channel. And I guess I'll talk to you guys whenever I post next, whenever that happens to be. All right. So long,
See you
everyone.
guys.